Hey everyone, welcome back to another episode of Deep Dive Podcast. I'm your host, Rachel Wolfson. Today I've got a great interview lined up. I'm speaking with Joshua Sum. He is the Chief Product Officer of Solayer. Solayer is an extension of Solana, and it's a really cool project with a lot of great use cases, especially payment use cases. So be sure to stay tuned for this entire interview with Josh so you can learn more about Solayer and what they're doing. Also, before getting started, I want to take the time to remind you guys to smash that like button, hit subscribe, be sure to stay in touch so you don't miss all the great content that I've got coming your way soon. Okay, without further ado, let's get started with today's interview. Hey Josh, how's it going?
It's going great. Just landed yesterday in Miami. So.
Oh, nice. Okay, and so where did you fly in from?
I flew in from Singapore, but I'm usually based in San Francisco.
Nice. Okay, I am also based in Marin, as I mentioned. Very cool. We have that in common.
Yeah.
Josh, before we get started with the tough questions, can you tell our listeners a little bit about yourself, your background, and how you got involved in crypto?
Pretty long journey. I started in crypto back in 2020, 2021. So it's back in the days of the Wild Wild West. People were launching like DEXs everywhere, a lot of food-based things like sushi and pancakes.
I remember.
Yeah, and so that was my freshman year in college. And I joined a crypto team. They called Treehouse. Back then they were doing like a Bloomberg terminal for DeFi, so like monitoring all your positions. And I was really early on one of the first employees, joined in as like a quant/PM for about 2 years in college. And then in around year 3, year 4 of college, left the company and started College DAO. So we helped a lot of university students break into crypto, did education across 120 universities worldwide. Grew to be one of the biggest in the education space, helping people onboard safely. And after that, graduated about 2 years ago and joined Solayer. Same again, one of the first employees in, and now serving as more on the chief product side.
Cool. I think I remember College DAO, by the way. I think because obviously, I've been a reporter for a very long time in the industry. Where did you go to university again?
Michigan. So I went to University of Michigan.
Okay.
In Ann Arbor.
Yeah. I think I remember hearing about College DAO. So that's really cool that you started it.
Yes. Long journey. Helped a lot of students break into the space. And I mean, it's more like a non-profit, like a DAO. I mean, it belongs to the students. So yeah, it's still running. So
cool. That's wonderful. Well, you've got a great background and a lot of experience. So let's talk about Solayer. What are you doing there? You're the Chief Product Officer. And I guess let's just start off by telling us a little bit about the project.
yeah, so Solayer, we initially started in the restaking space on Solana. So we were one of the leaders in that, pioneered that. And afterwards, we saw that, hey, we were using a lot of the technology to speed up and like land transactions more reliably on Solana. And we decided, hey, let's take that a bit further and let's solve for like scalability. And we took that to the extreme, and we're launching a hardware accelerated L1. So we used a lot of technology coming out of the AI sector, NVIDIA chips, specialized dedicated hardware, to basically make Solana run really, really, really fast. So everything goes back down to the hardware. We're going to keep improving the hardware and keep like swapping things out, keep programming the chips different ways, to make sure that Solana can run really, really fast. So that's essentially what we do.
Got it. So Solayer helps Solana run fast. Now, would you say that Solayer is an extension of Solana, or is it something that's competing with Solana?
So we aren't competing with Solana. It's a bit of a touchy subject, but we see ourselves as more of an extension. Mainly because we had to separate out our chain as a separate like state, because otherwise we ran into a lot of technical bottlenecks scaling it to the level that we're thinking about. So owning the hardware and running out the state on a separate chain, that helped us a lot. But we still run with the Sol gas fee. So that's going to be, we're very, very aligned with the Solana ecosystem. We started there as well, and we continue to build products on Solana. So we have like a card that you can spend USDC on Solana in real life. We are also launching an exchange soon on Solana. And these are everything we try to be as aligned on Solana as possible. It's just that the chain, we had some technical issues that we could not push to like 1 million transactions per second unless we separate out the chain. But at the same time, we don't compete with Solana because the kind of applications that we're targeting to deploy on our chain would be those that couldn't deploy now. So it's more like an experimental space for people to scale these super low latency applications and drive demand for Sol as well. So that creates a whole new design space, really, really cheap rent. People can deploy programs without spending too much money. That used to be an issue on Solana where you need to deploy a program, you need to spend like a few $1,000s sometimes. And it makes it very hard to test. So doing it on Solayer means that now you can design, go crazy. And if you want to bring it back to Solana, it's one-to-one. So it's SVM compatible. We run the same Solana virtual machine. So any program that's deployed on us would work on Solana as well. So people could use us, test as much as they want, even do some novel use cases that are too economically prohibitive to do on Solana. And then when Solana's scalability and maybe the cost goes down as well, they can always bring it back and tap into the liquidity, the community, and everything is there.
When was Solayer created? What year was that?
So that was 2024. Yes.
Okay, so a few years ago.
2 years ago.
And so before Solayer, what was the situation with Solana? I mean, how people would build and it would just be expensive, as you mentioned, and slow transactions. And so you saw the need to create this extension.
It wasn't slow and it wasn't expensive. I think Solana was already leading in the space. It was already one of the fastest chains, one of the cheapest and smoothest user experience. You didn't have to approve every token approval and things like that. It's just that we found that, hey, there were times when Solana actually went down because of like huge amounts of traffic. So we were saying, okay, are there ways where we can improve it? Our initial way to improve it was to use restaking and allocating stake on Solana to push through transactions on the validator level. And that helped for a while. And that also helped us push transactions through when the network was a bit unstable. But then now when we were thinking, okay, if we want to push it to the limits, right? So Solana is doing around 3,000, sometimes 10,000 transactions per second. Right now, we just launched our mainnet a few months ago, and we did around 300, 400,000 transactions per second on mainnet. And I know there are a lot of chains out there that are doing, they would basically do like a native token transfer with 2 addresses, and they do it really, really fast on the same machine. And that could push the TPS really high. We don't do that, so we try to be as fair on the benchmarks as possible. So we tried all sorts of messy transactions, things that you would see in the real world. So it's that 300, 400,000 transactions per second. It's real. It's something that people could try out if they want to build an exchange on our chain. They would see that level of throughput and it will not go down.
Okay, yeah, no, that's really interesting. And obviously, thanks for clarifying that. In terms of the use cases with Solayer, I mean, you mentioned an exchange. What other use cases are there that are being built?
Yeah, so we have a really small cohort of companies that are being built on our chain. Some of them are focused heavily on like launchpads, mainly because if you have a launchpad to graduate and then have people trade on that, you need a good amount of throughput. So that is one of the use cases. And they also have like an AI angle where they have AI agents that basically makes trades on your behalf. And then the token that's being graduated is actually based on the AI agent that's doing the trading. So it helps to, I guess, bring a bit more like real revenue in that sense. So people, one of the things that they were trying out was that, hey, if there are prediction markets out there, can we set an AI agent to basically look at these prediction markets and then based on like the real world news, read Twitter, do all that stuff and basically make these trades on these prediction markets. And if that AI agent is profitable or you think it's profitable, you could buy the token if you want to. That's more of like the optionality. But just having that, you would essentially need a lot of transaction throughput to support these AI agents to make these trades and also have people trade on top of these agents as well. So it's a bit multi-layered, but that's one of the use cases. Another use case, Spout Finance. They're recently part of Solana's incubator cohort as well. They're doing real world assets where they tokenize equities, and instead of selling your equities where you start to incur like capital gains taxes, they actually allow you to borrow against it. So essentially you never sell. So say you own NVIDIA that's tokenized on Solana, and you don't want to sell NVIDIA because you think it might keep going up, right? You don't want to lose that exposure. You could borrow against it, keep that in stable, so you pay a small interest rate, but you essentially don't pay the capital gains taxes, and it continues to appreciate over time. So that's what they're doing. It's just that the rebalancing and all of that needs very high throughput, and that's what we come in to help them synchronize with the real world markets, as well as what's happening on chain.
Yeah, that's impressive. How many projects do you know, like how many projects are building on Solayer?
Right now we have 3 projects. We're intentionally keeping it small, mainly because we are looking for applications that are like generating revenue, things that have a proven demand, and it's less on the airy, fluffy projects that we're seeing a lot in the space. We want to have a bit more grounded projects with proper use cases. So these are the 3 ones that we have picked so far. And yeah, we sometimes receive more applications, and we'll go through everything on like a rolling basis. We have no specific like dates or like a cohort system, but we would support every ecosystem as though they were as part of a cohort. And even after the cohort, they would also receive as much support as from our side as possible.
Okay, yeah, that's really interesting. Let's also talk about the token behind Solayer's Layer. So let's talk about where that comes into all of this, how it comes into play.
Yeah, so Layer is pretty interesting because it has multiple use cases, and it's the native token for Solayer. It's our governance token. Our chain is using Sol for gas fees at the moment, mainly because it helps very much with user onboarding. There's a huge thing when people have to onboard to a new Layer 1, and they have to go, the only way to get on board is to go to an exchange or receive an airdrop, or then they have to fund their wallets. It's rocket science almost for your average user. So that's why we decided, hey, let's just make it Sol, so that whoever's on Solana just continues using it as per usual. Yeah, just click the same buttons and everything just works as seamlessly as possible. Also keeps us a lot more closer to Solana ecosystem as well. Where Layer comes in is that's the governance chain, the governance kind of token. It helps us choose different things. There will be staking coming up soon, where you could basically participate in the proof of stake of the chain. So the way the chain works is that there is a sequencer, and people will pay Sol gas fees to process transactions. But to secure the chain, it actually takes Layer. So you would have a proof of stake or a network of provers that would basically make sure that whatever transaction is happening on the sequencer is actually good. And that's where the proof of stake comes in. So you will stake Layer on each of these checkers, and that will be widely available. So anyone can participate in this. Yeah, and then the APY will be pretty high as well, at least at the start as we onboard the ecosystem. Yeah, and that is some of the use cases for Layer. As we roll out more things, we have several different product lines. We have staking, we have the SUSD stablecoin that's backed by real world treasury yield. We also do have a payments card. So an app just came out as well, where you can basically spend USDC on Solana in real life through an app. You can receive it like Venmo. So you can just show like a QR code, and you can't track in that sense how much money your friend has. So if you go out for a meal and you split the bill, you don't want them to see your actual wallet and see how much money you have and where and track everything, right? So you can actually share like a one-time address, and it's gonna, like, you can receive funds there and spend it on your card without sharing too much information in that sense. So all of these would also have a role with Layer. So even the exchange that's coming up soon also will have aspect with Layers. So I think that is, we want to keep it as much of an ecosystem play as possible, where every touch point with the customer or every touch point of users would involve Layer in some sense.
Yeah. The payment app that you mentioned, what is it called?
It's called Solayer Pay.
Solayer Pay. It's really interesting. And so can people in the United States use it, or is it a particular region, or is it global?
Live on app stores. It's on Apple app stores and Google as well. So you can start downloading it. Yeah, and we're going to keep improving it. Yeah, and we just had over at Solana Accelerate, the conference, people were like downloading it. We're giving out like plushies for it. And we've seen good volume come out of our card as well. I think that has been one of our big adoption points for Solayer so far.
Is it a physical card?
Yes, I actually do have it.
Yeah, show us. I'm curious.
So this one is, the physical cards are coming soon.
Okay.
It's going to be plastic only.
Okay.
This is actually the only metal card that's available. But this is like they give out like a proof for it. So it's like a test in that sense. So yeah, this is the card.
And so because you're the chief product officer at Solayer, are you responsible for ensuring that this product looks a certain way and works well and is consumer friendly?
Yes,
Okay.
and yeah,
Cool.
the metal card. Yeah, we're just experimenting with like the card to make sure that if we do roll out the card, people will buy it. So that's why metal is the full metal card is still a question up there.
That makes sense.
Based on demand, so we might do test the market a bit more, but plastic will be out soon. So.
I'm happy to test it, Josh.
Let's do it.
I think we should go to a coffee shop in SF and test it. Is that something you can do
Yes.
with Solar Pay?
Yes, I actually have it on my Apple Pay. So
Okay.
I've been using it as my own like daily
Okay,
card
so
as well.
that's the follow up. We will do that. That's
We
exciting.
can get matcha because like our card is green. So.
Oh, perfect. I love matcha. It's my
I love
favorite
matcha
thing.
as
Okay, great. But my other question was regarding Solar Pay and the card. Now, and this is an interesting problem in the crypto sector, right? We've got a lot of crypto natives, and my listeners are also very crypto native. But for someone, I want to know who you're targeting. Are you targeting the crypto native users, or are you targeting mainstream and you want to bring that crypto adoption to the mainstream through Solar Pay?
I think it's both, right? I think your crypto natives they already have stable coins. They are gonna be, if you are gonna be at a dinner table and then you split the bill, and someone gives you that whole scanning process is actually pretty crypto native. That people want to split a bill with USDC. Most people would just say, let's just use Splitwise, let's use Venmo. We have a group chat, we send it on Instagram or whatnot. But I do think this could be targeting at some of the traditional users as well, mainly in geographies that are not, where you don't have these banking rails, right? You don't have Zelle and stuff like that outside of the US. And so for some geos, like they would actually love stablecoins. Sometimes even contract workers, freelancers would actually prefer to receive USDC because it's a store of value for them. Because like currencies are also pretty flexible, pretty volatile in that sense as well, based on where you are. Yeah, and we have also seen adoption of things like different like virtual accounts, things like that, even in TradFi, where people would actually don't mind holding US dollars, and then they would spend it out of their virtual accounts, things like that. I think this just brings a layer of like convenience where you can actually just send it really fast, really anywhere in the world, USDC. And if you want to receive money from like you did some work, just share your address and then you can spend whatever you made on in real life without having to go through the whole off-ramp hell in that sense.
Yeah, no, I mean, it makes a lot of sense. And yes, USDC is honestly my preferred payment method with everything. But then you say it to a non-crypto native and they're like, what is a stable coin? So I think this is a really cool way to bring mainstream adoption to the average consumer once they start to use it and see how easy and much better it is to use stable coins versus fiat.
Yeah. And I think like in the US, I guess stablecoins take a very much under the hood. Like banks, everyone would use the stablecoins, but the end user doesn't really touch it too much. Mm-hmm. But I think once you leave the US and then you go to other geos, it's definitely very, very up. Like
Yeah, can we actually just talk about that a little bit? Because I know you're based in SF, but did you say that you flew in from Singapore or you spent time in Singapore?
Yeah, I grew up in Singapore.
Okay, so can you tell me a little bit about the stablecoin economy there? I mean, is it more common, or I mean, in Europe as well? Like, where are we seeing stablecoins being used the most, and which regions, in your opinion?
I think stablecoins are being used everywhere. I was in Dubai and Abu Dhabi like last year for Solana Bitcoin, and there was a lot of adoption coming out of the Middle East, GCC region. I think there are also some in Europe as well, here and there. In Africa, I saw like I think Celo and Stellar's having a lot of volume coming in from LATAM and Africa as well. So I think like emerging economies where, in a sense, the banking rails haven't been fully fleshed out yet, we could very much just leapfrog the entire thing and just go straight to the future in that sense. Because now you can immediately you can bypass all of the reason why like a lot of innovation and financial innovation that's here in the US, there's a lot of regulation, a lot of things that are already in place. It makes it a bit harder to move. but if it's not fully established yet, we could just go straight for the end game in that sense. So I think in emerging economies, that's huge. In Singapore, I think we do have our own national version of like Zelle, which is like this national banking thing called PayNow and PayLah, where it's free as well. You can send it to people's phone numbers, very similar to Zelle. And it's also tied to your national identity, so it's very fast, very easy to send money around. Same for businesses, it's easy to send money to businesses as well. So stablecoins on that side might not be as relevant for internal transfers, but most of the volume and transactions going through Singapore are actually international, right? There'll be a huge financial hub, a lot of transactions, a lot of family offices in Singapore. So I think that's where the international transfers and stuff like that would make sense to come through stablecoins as going into the future. And there are maybe a few players in Singapore where they are also looking at expanding the full stack in that sense for stablecoins and banking. So being that interstitial like layer between like TradFi and stablecoins. I think I met Meta Comp, and they basically have all the licenses that they need to move ahead with things like that. And they're even having that for agentic payments and agentic finance as well, where your agents could interact with like a virtual account, stablecoins, and all of that, like the full stack, even have yield on top of it. So I think in Singapore, it's very much is moving fast, and it'll be more of like a adoption. Like they will build the new technologies and the new standards in that sense, because you can just move faster that way.
Yeah. So speaking of agentic commerce, I'm curious to get your thoughts on what you think of agents transacting with other agents, and is this something that Solayer is going to really focus on moving forward, because we're seeing that a lot now?
Yeah, I definitely do think so that agentic payments would be a huge volume in the future, mainly because when I think about an agent paying another agent, the most native or the most natural way to transfer value between two agents, I don't think is card. It just doesn't make sense. You can't do micropayments. The fees are high. But if you do it as stablecoins, it's the most natural. It's digital money. It's meant for digital transfers. Have the agents have a wallet, sign off things, and yeah, I think that is the most direct way for two agents to pay each other. And then that from that first principles, you go out and you say, okay, if you're gonna pay for things or an agent's gonna buy stuff for you on the internet, you could give it a card, you could give it limits and stuff like that. But what happens when an agent needs to hire another agent is probably gonna be better if they just use stablecoins. So we are looking into that area. And the whole thing about our chain is high throughput. If the number of users on the internet is in the billions, and each person's gonna likely have multiple agents helping them to buy stuff or trade with each other, that's gonna mean that we need throughput that can handle 10 billion, 20 billion concurrent users or agents in that sense. I don't think many payment networks can handle that right now. And I think that's a very clear use case where the number of network participants, basically the number of transactions increases like exponentially as you have more participants in the market, where it really requires that 300, 400,000 transactions per second, or even a million to even handle that kind of workloads. And these agents might not even be doing simple transfers. They might be doing prediction market stuff on your behalf, right? And they're doing like 10, 20, thousands of transactions within a minute because they need to arbitrage stuff. It just makes it a lot more automated on the payments and the financial side, and it makes sense for our chain to support things like that.
So let's shift gears a little bit. I'm curious to know more about the challenges that you encountered when creating Solayer. And I mean, this is a big project, it sounds like, that you are undertaking, right? You're this extension of Solana. You've got payment rails. People are using the card and USDC. So what has been the biggest challenge on this journey of creating Solayer?
I think one thing, it's mostly two things, right? One is distribution. That's an age-old problem. Everyone needs to fight for distribution in a very increasingly noisy market. And at the same time, traditional players might not even play nice with our current industry, where they might just completely bypass us, where they take the technologies that we've been building for over the past few years and they just completely run with it without, there's no reason to use our infra if we don't basically be best in class. So I think that's where we are finding to be the best in class, where it's going to be very hard to replicate our scalability. Then the traditional players would be incentivized to use us, because building it in-house would just take too much and many mistakes along the way as well. So skip the entire process, use us as a solutions provider. But at the same time, regulation is also one thing, because regulation unlocks distribution in that sense. You can't market certain things unless you are regulated. So that's the first thing, distribution. I mean, it's always a fight, and we need to convince people and let them know that this is what we're doing. It's not simply very fast. There's a lot of other things to put, what the use cases, new design spaces, to getting people to understand like what this truly unlocks. That's the first thing. Secondly, on the technical side, it's a lot of data. If each transaction, maybe let's just say it's like 4-8 kilobytes or whatnot, and you have 1 million of them per second, that adds up on the data requirements really fast. Having to index that data also takes a lot. So we had to build a lot of the pipelines, indexing systems, to make sure that whatever data that we're pumping out through these transactions, we can actually index it and also share it with our ecosystem. So say our ecosystem needs to call and say, hey, what happened of all this sequence of transactions? What is relevant to my user? It's a whole sea of it. So being able to find that needle in a haystack in that sense, is actually a huge ask. It's petabytes of data. And we had to leverage a lot of even the best in Web2 technology right now to basically pull out all that data.
Interesting. So going back to the USDC use case, I wanted to ask this and I forgot, so I'm asking it now. If a user holds USDC and they're not spending it, are they earning rewards?
Yeah, so if you change that to SUSD, you'll be earning treasury bill yield. So US Treasury yields maybe 3-4%. And that's great because people could basically treat it like a on-chain like bank account in a sense. And because it's backed by US Treasury yield, it's basically the most stable or the most predictable asset class out there. And we work with some of the other providers in the space, which are also heavily regulated, some of the biggest in the space, to basically deliver this yield. So it's also very safe in that sense. So we do it, like, I guess that's a way that people could start earning yield on chain. And then whenever they want to spend the card, it's a simple one click and it goes out into USDC again, and you can spend it on the card.
Got it. So we also discussed before the interview that there are a lot of other innovations coming to Solayer, and probably didn't ask you about those yet. So is there something that you also want to mention that you're looking forward to coming up?
Mainnet's going live. We recently had our launchpad deploy fully on chain, and they are launching stuff right now. And then like we're finally seeing all of the work, all of the products that we've been building, all the infra. We're finally seeing it being taken to market with our ecosystem projects. So it's very cool to just go in there and see like the trades come through, and like the system's actually making it happen. And back then when we were doing some load testing, like we had a swap interface, and because we're doing 400,000 transactions per second, it was actually too fast that the human eye or the screen doesn't render it well. So we actually had to throttle the front end because the infra was running too fast, which was very reverse. Or usually you would see that, hey, the front end is not the bottleneck, it's actually the transaction processing that's the bottleneck. This time we had to actually physically slow down the screen, otherwise it breaks the user experience. So it was cool to see that happen.
Yeah, and I mean, you are the chief product officer, and I think, and this has been a problem in Web3 for a while, user experience, right? Like, and even for me, a crypto native, there are times when I'm in an app or even on Coinbase, and I'm just like, what is going on? As the chief product officer of Solayer, what are your thoughts on user experience and making that better just in general for the Web3 and crypto ecosystem?
Yep, I think speed is one thing. And then secondly, making it actually real time. These are two big things. And then the last one is that part we have actually done pretty well. It was more like the interconnectivity of everything. So you don't have to do those back in the day, doing those like bridge, and then like it's basically like flinging a little stone into the universe and saying like, figure it out, right? Now a lot of that has been solved. We have a lot of bridges, a lot of things abstracted away. On-ramps are doing really well with on-ramp aggregators. We're going to use all of these technologies to make sure that the onboarding systems or like getting funds there is easy. And then using like MPC, things like that to make sure that you don't have to remember your seed phrase, all of these things. You can use Google login. I think all of that has been very much built already, and a lot of it like is industry standard. There's a lot of innovation coming out like Privy, all these wallets that are making it very easy to onboard. But the next two parts, I feel is a bit more tricky, is things like how do you make it super fast? Because in Web3, we're okay with maybe a transaction taking a few minutes to confirm, maybe a few seconds if the chain is super fast like Solana or whatnot. But when you go into e-commerce, right? My background was previously in e-commerce, direct to consumer. If the page loads a second slower, you see conversions like completely wiped out. And that's just 1 second. For crypto to actually make it there, I think the payments need to be so fast that we could actually help with this. Because otherwise, why would an e-commerce merchant ever want to care about stablecoins if latency and things like that is one thing that severely impacts their business outcomes like profit and like revenue, right? So making it super fast, you don't have to basically wait too long for interaction to happen. And that also kind of ties into like being real time, because if you make a transaction right now, you pay with Stripe, there'll be a callback. You know what happens. The payment was complete, done, right? It's actually pretty fast. But when you go to crypto or like you use like stablecoins or any kind of blockchain products and you make a payment or you make a transaction, the way the system is architected right now is that we don't actually know that transaction is actually done. You keep asking, is it done? Is it done? Is it done? Is it done? And then when it's done, then then I'm going to go back and say, okay, transaction complete, update the front end. I don't think that's going to fly for a lot of the adoption of like big use cases that we're looking for, like e-commerce and whatnot. Because just that polling process is like back in the day when we had email, where we send like an OTP and we keep refreshing on Gmail and see did the OTP arrive. That's like very old school and and that's the stuff that will break a user experience, because I gotta wait then like, okay, I don't know the uncertainty, right? Versus something that once we saw streaming and everything coming into the economy or like the internet in general, we move from that whole Gmail has it arrived to like chats, like messaging, right? Where it's very instant. You send something came back. Or things like people used to download software to their computer. Now that's software as a service. You just do it up in the cloud and everything's as instant as real time as possible. So I think that there needs to be a graduation from this polling and tracking of whether transactions are being settled to something a lot more real time, where you send something on chain and you know that it's being completed within probably the same call. And that's, I think, what's going to unlock a lot of the next steps. So I think these are two ways that I think user experience should evolve in that sense. One is the onboarding side, getting the stuff there. And number two, making sure that when it does go through, it's not a jarring process, right? All the payments, everything happens like in one go.
I want to get your thoughts on, we're seeing a lot of innovation in the crypto sector right now, especially with the intersection of AI and crypto. And I feel like that's the biggest use case that we're seeing. A lot of these applications have to have some sort of an AI element. So I guess, what is your take on that? And then what are you most excited about in the industry currently?
That's very interesting, especially with AI. I'm actually very heavy on the Web2 side. I actually run one of the biggest AI conferences in SF. And I work with a lot of the teams in Web2 and traditional AI. And I think it's overlooked. It's actually overlooked. The whole agentic commerce and the agentic payments part, there's actually a lot of infra that needs to be built to even run payments with an agent. And yes, there's Stripe. There's a lot of people who have built out that infra, but it's still way far from what we actually do need to accomplish all the use cases that we're thinking about. Is crypto the answer to that? I think that's to be explored. Intuitively, I think it makes sense. But at the same time, you have to work with regulators, and not just in one jurisdiction, in every jurisdiction. And then you got to get licenses, not just for payments, but you gotta get licenses for every part of the stack as well. So, and that's also very much unexplored space, right? There's KYC, but is there a way that you can like KYC for your agent, right? Can it do things on your behalf? How do you know which identity that agent is tied to? And then if it does something wrong, who can you claw back these funds? There's a lot of things that the picture becomes a lot more complicated once you actually say beyond the narrative, how are we going to actually make it happen? There's a lot of crypto projects that slap on AI, and it becomes very messy because I don't see what the use case is for a lot of them. At the same time, I do see that there's value. Things like attribution, content. If you train data, is there a way to watermark the content? And then is there a way to enforce that people actually respect it? And number two, how do they get paid on that? Things like that. I think there's going to be more scrutiny on the regulatory side, on the AI side as well. So it's a very massive space. We'll see how it evolves between the intersection between crypto and AI. I do think there's something there. I don't think we have found it as an industry yet. But at the same time, we only get there by being very serious about how we build it and chase less narratives, be less focused on the short term, like pumps and dumps, all that stuff. Is if we focus as an industry on just grifting, people will see us that way. And we're already seeing it in Web2, where a lot of AI companies are staying far away from crypto because of the reputation that we've built up. So I think if we follow this path, it's going to be self-inflicted, whatever happens. But we also do have a chance to become a very key and pivotal part of the shift into AI in that sense. Being like built more like the anchor, like the guardrails, or the things that are trusted, or the things that people could encrypt and make sure that this is provable in that sense. So yeah, I think it remains to be seen, but we should definitely take it a lot more seriously and name and shame the bad actors, right? So.
And what are you most excited about in terms of the crypto sector now? I mean, you've been in the industry for quite a while. You've seen the ups, you've seen the downs. So what are you really looking forward to now?
I think now actual penetration into TradFi. We're seeing it with real assets, we're seeing it with PubDexes, we're seeing it with all of these regulatory kind of shifts in the industry. Number two, prediction markets. It's a completely new contract type that we have not been able to push through for. This is not just speculation on chain. It's now embedded. We have regulated players who are in this space. People are queuing up to the CFTC to get prediction markets through, and I think that opens up the TAM a lot more than what we think. Prediction markets would be very consumer friendly and also could introduce new primitives to finance in general. So things like options, things that people that were doing in the past, constructing these crazy ways to hedge something. You could hedge it with prediction markets now. You create a prediction market on that, and then based on the event, if there's a way to resolve it, you could just jump the entire thing, right? Like for example, if you want to hedge out Bitcoin's price, you could actually create a prediction market that if Bitcoin price hits this, resolve it that way. Yes, no, and then create a market on that. That could act as insurance for someone. As a company, maybe a foundation might want to hedge out their risk because if Bitcoin hits 40K, chances are they have a portion of their treasury is allocated to a specific asset. That itself is you might want to hedge that, but hedging it right now, they're probably doing a lot of options and things like that. You could also hedge it on prediction markets. Might be maybe liquidity might be an issue, but there might be ways to do it that way. You could even bring it to consumer, like on social media, bet on which video is gonna blow up. Maybe there's ways to bot it, but things like that makes it a lot more relatable to your average consumer. Sports betting is huge. Just make things interesting. We kind of lost that over the years. Things are less interesting in crypto right now. So maybe make things a bit more interesting, but less grifty.
I see. Yeah. Well, no, these are wonderful insights. Josh, we're running low on time. So any final thoughts that you want to share with our listeners before we end the interview?
Yeah, I think our industry is maturing, and that's also good. Markets are down right now. I think everyone kind of recognizes that. Liquidity is thin everywhere. But I do think these are growing pains. We did learn a lot of lessons. We learned that we, as an industry, we have to be more regulated. So that's something that we have learned, and we are going in the right direction in that sense. So I do think these are growing pains. We'll work through them. But in the long run, I do see this being a critical part of finance, right? It can actually help with a lot of the older systems, like revolutionizing all of that. So.
Yeah, wonderful. Well, I'm so happy we got to chat about Solayer today, and I learned more about the project, which is wonderful. I definitely got a lot of good insights from you. If our listeners want to get in touch with you, or if they want to learn more about Solayer, how would they do that?
I guess simplest way would be to hit me up on Twitter. I have my handle up there, or you can send a LinkedIn DM.
What is your handle?
On Twitter, I am 0xjsum. Yeah, so that's my name, Josh Sum. So 0xjsum. Or you can probably just search me on Twitter. I'll be there. If not, LinkedIn works as well.
Cool. And you also mentioned you host an AI event in San Francisco. Has it already passed this year, or is it upcoming?
We held our first one this year, right one day before NVIDIA's GTC.
Okay.
So we had around 2,000 people attend in person. 50 of the best startups in SF were there.
Cool. Wow, I'll have to come next year.
Next year, yes, we're gonna run it back next year.
Cool, great. Well, Josh, thank you. It's been a pleasure.
Yes, 100%.
Thank you.
Amazing.
Special thanks to 4Labs Digital for producing Deep Dive Podcast. I'd also like to thank the sponsors behind Deep Dive. You can click the links in the show notes to learn more about each of the initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share.